So can stocks make new highs this week? Let's get into the action here. It is our Monday night, not Sunday night video, and we're going to go over the levels here in hopefully 5 minutes or less. It is February 17th, 2025. Again, if you like the content, don't forget to give me a thumbs up, subscribe to the channel, and come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyways, the futures have not crashed yet despite Warren Buffett selling his entire SPY position last week. That was a big topic of discussion, and it likely will be throughout this week here. Did a video on that yesterday if you want to check that out. But anyways, futures here up about 9 points on ES, so kind of a nothing burger as what you'd expect here from a holiday session. But we're just going to kind of go over some of the dealer levels right now and where I think we could end up here this week. I do think it's likely we could make new highs, but I'm not expecting much more past kind of a pinning type action here. And you can see if we flip on SPX, I'll just throw that back in there. I think we had, well, either way, you can see we had this kind of wedge type pattern here, and we pushed through those highs, but we didn't really follow through on Friday. So there's still quite a bit of, call resistance there at that 6100 handle. And I do have these marked here for members in my, daily stream. But, you can see the 610 on SPY, and of course there's dealer call resistance up there at 615. But the key level we're really going to be watching here is, I think possibly earlier in the week, we could try to inch up into that 614, maybe 615 area. I don't know if we're going to get quite to 615, because if we take a look at SPX, we have, a pretty large dealer level with the whole round number of 6150, which is about 35 points from here. That would take us into like the 613.90-ish area on SPY. So maybe 614 would be a high. And then I think towards the end of the week, we could kind of pull back towards that 6100 slash 610 handle on the spider here. But what we're really going to be watching is, and one of the things we talked about, so we're not even, for this week, we're not bearish at all. We talked about these puts starting to decay. Bears could not break 6,000 SPX, right? They got everything they wanted on CPI. We tested it Wednesday morning and we just V-shaped off it. So dealers are aggressively buying dips here. That doesn't mean we can't dip. It just means it's going to be very difficult for it to follow through with much downside into next week. And it is OPEX. There's not a lot of economic data, although Trump is speaking tomorrow at, I believe, 1 or 2 o'clock. So that could provide some volatility, but we don't have CPI or jobs or anything crazy. So dealers will probably have control over this tape, but I'm going to be watching 605, and I'm just going to show you why. Because for Friday, if we take a look at Friday's gamma exposure, we can see that 605 is actually just a little bit more on the put side right now. So dealers are kind of supportive there, and they're supportive at 600, as you'd imagine, as well. But if bears are unable to break us down earlier in the week, that will get, it's likely that can become more supportive towards the end of the week, as kind of time and things like that sort of start to take a larger role as we get closer to that big expiry. So I would expect some sort of pinning action here this week, but that doesn't mean we can't continue this this next leg here. But watch that. If bears can push us back towards 605 and break it earlier in the week, then we could see, closer to 600 and then further beyond that. I do not expect that. There's way too many flows here going on right now that will keep this market kind of pinned here. And again, this market was heavily hedged for that CPI. They say there was a surprise in inflation, but the market is telling you that it's not surprised by the up move here. So that to me was, mostly priced in, and I think hedges did their job there. That said, I will say that VIX here, buy volatility when you can, not versus when you need it. I think volatility here is kind of attractive around this 15 handle on the VIX, and it's not a terrible idea. That, Feb OPEX, post Feb OPEX especially, can be it is a known bear window. So, buy when you can, not when you have to, and those things can be done to take measures to protect yourself. Outside of that, though, this week we're kind of expecting pinning action. We could see a little bit of volatility, might be good for day trading, but not a lot of catalysts. And again, we're just seeing kind of dealer buyback effect. Keep us light. I mean, look at the volume on Friday. One of the lightest non-holiday sessions you're ever going to see. So again, that's the type of action we're expecting this week. Pinning, maybe a little bit of new high early in the week, and then kind of just a walk back to mean reversion towards Friday. Anyways, guys, I'll wrap up here. You guys take care. Don't forget to come find me on carnivoretrades.com. See you guys all tomorrow.